Sales for the month of August coming in stronger than expected, climbing more than 20% month over month, with mortgage rates coming down and demand clearly strong. So is this the turning point for the housing market? Joining us now, Housing Wire lead analyst Logan Mohtashami. Logan, thank you for being here. So what do you think? Is this the kind of the unlock that we have been waiting for?
You know, whenever mortgage rates head below 6.64% and down to 6%, housing data tends to improve, right? New home sales tend to improve. Purchase application data has just had the best 8 weeks of the year. It's always when rates reverse up higher, above 7%, that the whole movement starts to end. So it really depends on, can mortgage rates just stay down here near 6% long enough to maybe get housing permits growing again, maybe to get housing starts going. It's very early, but we've seen this show before the last few years. Rates get down here, demand picks up a little bit, then rates go up and demand falls. And basically new home sales has really been in a range for about 7-8 years now.
So is it fair to say that it's more important that mortgage rates just stabilize at a certain level rather than the absolute level that they are sitting at?
Considering how low sales are, if they just stabilize around 6, I personally believe the Fed is petrified of, housing recovering, because people will start, buying homes, having sex, having kids, buying more stuff. How are you supposed to balance an economy if more transactions and consumption goes? So to this regard, they always tend to get a little bit hawkish with their statements when the 10-year yield is down here and mortgage rates are down here. So I don't believe the Fed wants housing to come back, but if it stays around 6%, and this is only because the labor market is getting soft out there, sorry, Beth Hammock, but if it just, duration is the key. And if rates just go back up again, we're doing this back and forth with housing. The builders aren't going to be issuing new permits with their completed units at the levels they are today.
Yeah, I was going to say, the long time thinking has been, unless you increase the supply, prices will just fill whatever savings you're going to make on a lower mortgage rate, right?
Yes, there's also a big difference. The big publicly traded builders, I know Lennar's gross margins are falling, but they still have enough wiggle room. The smaller builders are more at risk here. Residential construction jobs have been lost for the last 4 months. Specialty contracted jobs have been lost for 5 or 6 months now. Manufacturing jobs have been losing since the end of 2022. But getting down to 6 can at least give a little bit of life. It's the duration that matters for housing data, and the last 3 years have shown us this.
Right. Where you say, does the median price, is it confusing? We just talked about Lennar ASPs down 9.
Yeah, the builders are efficient sellers. They're not the March of Dimes. They're here to make money. So they will make deals where the existing home sales market still has to deal with a seller and a buyer. That's a whole different marketplace. So the builders are doing the best they can to sell product, except